Happy Friday, traders. Greg here with a market update post US CPI. So overnight we had US CPI numbers. They actually came out marginally weaker than expected. So both on the headline and the core numbers. So it showed more positive progress to the Fed's inflation goal. So we saw some quite meaningful moves across all markets last night. So if we start off with the bond market, so we saw US bond yields lower. So across the board, they were down about 15 basis points. But the bigger move actually happened in the Fed Fund futures, where we basically saw September now priced in as a done deal for the first rate cut by the Fed. And markets also priced in 60 basis points all the way down to December. So the question now for the market is not whether or not the Fed's going to cut rates. Yes, they are. The question is whether or not they're going to cut rates twice or three times before the end of the year. Okay, so if we move into equity markets, just the number, we saw S&P and NASDAQ straight away spike up 0.5%. But when the cash market opened, we saw a massive reversal in equity markets. And NASDAQ actually ended up down over 2% on the day. So it seems as if there was a few factors at play here. One, buy the rumor, sell the fact. Also, we've seen a great trending run in all the tech names. So some profit taking obviously is hit the market as well. And finally, there was a bit of rotation. So we saw the market rotate out of tech into the US small caps. So the actual Russell index ended up over 3% on the day. So look, I don't think the equity move is anything too sinister at the moment, other than potentially maybe taking some money off the table. And no doubt, I'm sure the dip buyers will probably be back shortly. So moving on to the currency space, we saw some big moves in dollar yen. So the yen is actually the currency that's got the highest beta to changes in US bond yields. So dollar yen actually fell 400 points at one stage. There was also talk that the MOF, that the Japanese may have also intervened, so use that momentum from the US CPI number to get dollar yen lower. But I think maybe that the tide has turned with dollar yen for the simple fact that we are looking at Fed rate cuts going into the end of the year, and at the same time we've got a BOJ that when it meets at the end of July is looking to marginally raise rates and also taper its bond buying program. So now we're starting to see the tide shift a little towards now to the yen, which is more favourable conditions. So I think those 40 highs that we saw up towards 162 probably will cap market now. Selling rallies now could be the trade. So this morning we've seen it's actually quite volatile already, some crazy moves in dollar yen. But certainly I think up towards 160, if you see those sort of levels, that's where I'd be happy to get short dollar yen. And finally, on the commodity front, we saw gold and silver have a good rally on the back of what happened last night. So gold is opening Asia and it's trading back above 2,400. Record highs there are at 2,450, and no doubt the bulls certainly are going to be targeting that level. But obviously there will be a bit of work that needs to happen for the market to get up to that level. But all up, look, US CPI certainly has changed a lot of the markets in the last 24 hours. Certainly in the bond space, and the currency space is probably where we've seen some of the more meaningful moves, where potentially we're seeing some trend changes. Anyway, listen, enjoy your weekend, and we'll check back in next week.